So now, hey, Mr. and Mrs. Customer. Now, within the life insurance plan, you can have multiple policies. And I just want to tell you about the two different types of policies that are most popular. And I want you to think of this as like owning and renting. So one of the policies is much less expensive. All right. This type of policy that you can have in your plan, it's very inexpensive. All right. It's a great way to make sure that you get a huge death benefit, like $1 million, $2 million, $3 million without breaking the bank. So if something happens to your family, they're covered. They receive a check tax-free. And this plan, the best thing about it is when you get it, the rate never increases. But it's kind of like renting an apartment. So it's like renting an apartment for 20 years. And at the end of that 20 years, the rent payment's going to go up. But anytime during that time, if anything happens, you're safe, secure. The payment never is going to go up. Your family is going to receive a check. Does that make sense, Mr. and Mrs. Customer? Makes sense. Great. The next type of policy that you can have in your plan, Mr. and Mrs. Customer, is kind of like owning a home. So let's pretend like you have a 30-year mortgage, Mr. and Mrs. Customer. So during these 30 years, if anything happens to you, the policy is going to pay out $1 million, $2 million, $3 million. Now, at the end of this 30 years, just like when you pay off your mortgage, you own your house, you have the ability to pay this policy off and you own it. You never have to pay on it again. And while you're paying on it, just like your home builds assets, is an asset that's going to accumulate value, go up, your money works for you in this policy. So when you pay into this, it's actually an asset. Your money's actually going to work for you. It's going to earn some guaranteed interest, guaranteed. So Mr. and Mrs. Customer, does that make sense? And you own it forever. So does that make sense in the difference between the two? But it is more expensive because it gives you more options. But if you think about it, it's not going to cost you anything because your money works for you. But long story short, Mr. and Mrs. Customer, does that make sense? All right, you don't got to go into all that, but the two simplified. Does this make sense? This makes sense. Hey, Mr. and Mrs. Customer, so out of those two options, what policy do you think would work best for your family in your situation? What would you want in your plan? And you can have both in your plan, Mr. and Mrs. Customer. That's a really simple way over the phone to introduce life insurance in a way that explains exactly what those are. Y'all with me here? Do you like that? So again, rent versus own. Rent versus own. Now, when you get through this and they tell you, well, I think I'd like the one that's kind of like owning a house. Or you know what? I think I like the idea of being able to protect my family for the least amount possible. Because here's the thing, guys. There is no bad life insurance. There is no bad life insurance. The only bad life insurance is the life insurance that's not in place on the day that something happens. So you can do a 20-year. All right, you can do a 20-year. Look, most whole life insurance policies, no matter what company you work with, eventually you can pay them off. All right. So it's just the idea. It's the idea. All right. So make sure most whole life policy providers out there offer an option to have it paid off. But if not, you can still think about it as you don't have to bring up the mortgage. It's kind of like owning a home. And the longer you own the home, Mr. and Mrs. Customer, you're going to earn value. Your house is going to go up in value. It's the same thing with this policy. You're going to own it forever. And when you pay into this policy, you're going to put money into it. Not only do you get the death benefit, but it's going to also allow your money to work for you in a guaranteed way. It's going to earn some guaranteed interest. Does that make sense? The whole thing here is to figure out what works best for them. So when they say that, boom, now you know they like protection. They're an interested customer. They like term or they like perm. We know the death benefit because you've already asked the income or the debt or the mortgage. The burial plan, typically I'm like, hey, most customers like you are going with something between $50,000, $100,000, $250,000. What would work best for your burial plan, Mr. and Mrs. Customer? Boom, there you go. Let them select. Great. So you get all this information. Now it's time to either close the deal or set the appointment.